Hello investors and future investors, welcome to the channel. For today's video, I'm going to show you one of the most undervalued stocks in the market today. I'm going to show you 3 strategies that can be used with this stock, and most importantly, I'm going to show you how to find these undervalued stocks, especially if you're new to options trading. Now, if you are new to options or you're trying to use options in order to make some additional income to supplement your already 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be introducing you to one of the most undervalued stocks in the market today. Now, if you guys have never heard of this stock, which is going to be Fiserv, and that ticker is going to be FI. If you guys have never heard about it, I want you guys to put Fiserv in the comment below. Now, you guys know how we do it. We like to go ahead and just get down and dirty with options. So we're going to be jumping into the advanced feature right here in order for us to go ahead and open up the chart. Now we're going to go ahead to the 1 year outlook in order to see how the chart is. Now right off the bat, you guys could see this is my favorite setup that I love to trade for options. And the reason why it's my favorite setup is because number one, the share price. The current share price, which sits at $124.30, is currently below the 200-day moving average. Here is the share price right here, and the 200-day moving average is representative of this blue line right here. Now, what the 200-day moving average tells us, it tells us the price that the stock has been trading for the last 200 days or around 6 months. And that price that this stock has been trading at is $178. Now, the second reason I love this setup, I favor this setup, is going to be because of the RSI, or what's known as the Relative Strength Index, and that is going to be down here right where I'm circling. Now, this line right here is your RSI. What the RSI does is that the RSI is what's known as a momentum indicator. The RSI gives us an idea of whether a current stock price is either overbought or oversold. Currently, Fiserv is sitting at an RSI of around 38. Now, 38 is really going towards oversold territory. As a comparison, for the RSI, the middle ground is going to be a 50 RSI, with anything going upwards above the 50 towards the 70 mark tells us that that particular stock is heading into overbought territory. However, vice versa, anything 50 going below towards the 30 RSI tells us that that stock is into oversold territory. So as it stands, Fiserv is in oversold territory. So 2 things I really love about this setup. The RSI is really one I like, is below the 50 RSI. And number 2, the current share price is trading below the 200-day moving average. Now, I cannot find a very strong support here, because this stock is currently trading at all-time lows, I believe, but we're going to verify and substantiate that as the video goes along. So what I am going to do, I'm going to go out to the 5-year outlook to see if I could find a very strong support. So I'm going to put my trend line right here, close to the current share price, and you can see right here, the strong support is around the 120 mark. The reason why it represents a very strong support is that if you were to follow this trend line right here, you're going to see that this chart right here has touched this trend line multiple times, going all the way back to, I think it's 2021 right here. So the 120 mark is a very, very strong support. Now, let's go ahead and go back to Fiserv, and I'm going to go ahead and give you guys some additional information that can be used before you go ahead and make an options decision. So let's go ahead and we're going to scroll down. Now, here it is, Fiserv. Let's go ahead. We're going to open more, and I'm going to read just a tad for you. Fiserv Inc. engages in the provision of financial services technology. It operates through the merchant and financial segments. Now, I could go ahead and read all this to you, but let me break it down to you so you could understand. So what this company actually does, it is a medium between a payment processor and a bank, a merchant bank. So the payment processors are going to be stuff like Square, Clover, Toast. These are all payment processors, and the banks are going to be like Chase Bank, Wells Fargo, New Bank, etc. So what Fiserv does, whenever you do go ahead and you want to purchase an item, you're going to swipe, tap, or insert your card. Whenever you do that, within seconds, you get a decision whether you're approved or you get denied. Now, in the background, what is unbeknownst to you, there's a lot of little transactions running behind there. So this is what actually happens. The payment gateway is going to send your information to Fiserv. Fiserv is going to interpret that information, make sure you are legit, so to speak, and then they're going to send that information to the merchant bank, let's say Chase. Chase is going to verify that you actually have funds available in order for you to make that purchase, and it's going to send the information back to Fiserv. Fiserv now is going to go ahead and make sure, they're going to check to make sure there's no fraud being committed. Then they're going to send the information back to the payment processor, and then you see that little sign that says approved. Then you could go ahead and walk out of the merchant with your groceries in hand. That is what Fiserv is all about. Hopefully you guys understood that, and that's the simplest way I can explain it. Now, let's go ahead. I'm going to give you some additional information. Currently, like I mentioned before, the 52-week low is around $121.03. So the share price of 124 is super close to the 52-week low. Let's go ahead and call it as it is. This stock right now is trading at its 52-week low. Now, on the opposite side of that spectrum, we have the 52-week high. The 52-week high is $238.59, which represents twice the value of the 52-week low. So that shows you there's actually an opportunity there. There's actually loss of value there if the stock decides to go back up. So let's go ahead. We're going to go down now and we're going to check the trading trends. So under the Robinhood tab right here, you could see lots of green here. That means Robinhood retailers like me and yourself, we have been purchasing this stock. Let's move over to the hedge funds. Now, the hedge funds as well, they have been selling a lot more than they have been buying. However, in the last quarter, they have started to increase their buys. Now, let's go ahead. I'm going to show you one more bit of information before we go ahead and jump into the options. Now, according to analysts, this stock represents a very strong buy. 89% of these analysts are saying this stock is definitely a buy. Now, under your research report, this stock has a 5-star rating, which is very rare to see. Now, they give you a bit more information, and down here, they're telling you that Clover, one of the payment processors I did mention, it tells you Clover is Fiserv's strongest engine for growth. So that is definitely something you want to pay attention to. Whenever you do decide to go into these merchants and you're making a purchase, see if they are using a Clover terminal or a Square terminal. Those two are the most popular. And lastly, before entering any options, you always have to make sure whenever earnings is gonna be. Now down here, you can see earnings is gonna be available on October 29th. That is exactly 2 weeks from today. So always keep that on your radar. Now, what you have been waiting for, the options. Let's go ahead. We're gonna jump into trade 5 options down here in order for us to open up the options chain. Now, this information down here in its entirety is representative of the option chain. And what the option chain does is that it gives us enough information in order for us to make an informed decision before entering any option contract. Speaking of option contract, I want you guys to do yourself 2 favors before I go ahead and show you these option strategies. Favor number 1, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number 2, always make sure to have an exit strategy before getting into any options contract. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. And lastly, these videos are for education and entertainment purposes only. Now, the first strategy I would be doing with Fiserv, because this stock is so severely undervalued right now, is gonna be one of my favorite strategies, and that's gonna be the DCA model, or the dollar cost average model. With this type of investing, yes, this is more investing than trading. What you do is that you purchase certain amounts of this stock over time as you build a position on this stock. So for instance, if you are trading with a small account portfolio, you could purchase $25 every single week of this stock despite the current price is trading at. What that does, over time, you're going to have an average cost, which is going to be the average between whatever the high was and whatever the low was. And that's the safest way in order for you to build the position. How do you make money? With the DCA model. With the DCA model, you will be able to generate a lot of shares doing an average cost. Now, you're going to leave these shares in your portfolio, and as the price goes up, that is how you're going to generate income. Now, the options. The first option strategy I'm going to do with this, I'm going to go ahead to buy. I'm going to go ahead to call, and I'm going to choose my strike date. The strike date I will be using is going to be January 21st, 2028, which gives me 829 days to expiration. The reason I'm deciding to go all this way out is because I want to give myself enough time to outweigh all the volatility in the market. And secondly, I do have high hopes for this stock. I do think it's going to go back up. I don't need it to go all the way back to its all-time highs. I just need it to go back a certain percentage, and I will be making some gains. Now, with my buy, with my call, and my very long dated option, I'm going to go ahead and choose my strike price. The strike price I will be going with is going to be below the current share price of 124, and that strike price is going to be $120. The reason I'm going with $120 is that I just showcased at the start of the video that the very strong support from since 2021 was around $120. So I feel very confident choosing this share price. Now, this is a buy call. And because it's a buy call, I'm going to have to pay. The amount I will have to pay is going to be $36.50 in the options world. However, in the real world, you're going to have to pay $3,650. And that's simply because each option contract does contain 100 shares. So you simply multiply your $3,650 by 100, and that should give you $3,650. Now, if you are risk adverse, feel free to go ahead and choose a strike price that's below the 120. And if you are risk tolerant, feel free to choose a strike price above the current price that I chose or above the current share price. All of these prices work. It's all going to depend on whatever your goals are for your portfolio. So now that I have this option strategy in my portfolio at the 120 strike price, I'm going to go ahead and use it to make consistent income. This option strategies, for those of you that do not know, or for those of you that are new to options, is going to be the LEAPS option strategy. LEAP stands for Long-Term Equity Anticipation Securities. It is a mouthful, hence we use the acronym LEAPS option. So now that we have the LEAPS in our portfolio, we're going to go ahead and use it to make consistent income. So now we're going to go ahead and change our parameters just a tad. And for that, we're going to go to sell, we're going to go to call, and we're going to be changing our strike date. We're going to be using strike date of November 14th, which gives us 31 days to expiration. The reason I'm going to be using November 14th is that I personally like to do monthly expiration. So the November 14th gives me the closest date to a 30-day expiration that's possible right now. So with my sell, with my call, and my monthly expiration date, I'm going to go ahead and choose my strike price. In this case, the strike price I will be going with is going to be above the current share price. And the strike price I will be going with is going to be the $137 strike price. The reason I'm going with the $137 strike price is because it gives me an 80% chance or higher of profit. Whenever I'm doing a covered call using a LEAPS option, I like to choose a very high chance of profit. That way, I'm trying to reduce the ability of my LEAPS being assigned or me losing my LEAPS. If I do lose my LEAPS, then I would not be able to make consistent income. And if you guys do not understand what I'm saying, then I highly advise you to search the channel, just type in LEAPS and go through those detailed videos of how LEAPS work. Now, with the 137 strike price, an 80% chance of profit, this time I'm going to be getting paid. The amount I will be getting paid is going to be $1.05. In the real world, that's going to be $105. Now, the most important part, what I like to do, I like to look for my ROI or my return on my investment. My investment is going to be $3,650. That's how much I'm going to be paying for the LEAPS. The amount of money I will be getting, or I can get on a monthly basis, is going to be $105. In order for me to find my ROI or my return on investment, I'm simply going to divide the amount of premium I'm going to be receiving, which is going to be $105. I'm going to divide that by the amount of money I paid in order to purchase the LEAPS, which is $3,650, and that's going to give me around a 3% return. Now, a 3% return on a monthly basis is an extremely lucrative return. Keep in mind, once again, if you do not want your leaps to be assigned, then feel free to go ahead and choose a strike price that's even higher than the strike price I chose. And there you have it, investors and future investors. Fiserv, which is an excellent company to be trading right now, is currently undervalued, in my opinion, and based on the charts and all the information that I showed you. In order for me to go ahead and use this stock, in order for me to make consistent income, I would be doing 3 different strategies. The first strategy is going to be the DCA, or the dollar cost strategy. The next strategy is going to be the leaps option, in where I'm going to go ahead, I'm going to buy a long call leaps. The third strategy I will be using is that I'm going to be using my leaps option as collateral in order for me to go ahead and sell monthly covered calls in order for me to keep generating consistent income. Now, I did promise you guys I'm going to show you guys how to find these undervalued stocks. So I'm going to do this really quickly, and the website we're going to go to is going to be finviz.com. We're going to open up this chart right down here, and I'm going to show you guys how to use this. Now, this is going to be really, really quick. If you guys do want me to show you a detailed video of how to use this information here, just go in the comments below and just type in FinViz, FINVIZ, as you can see to the top here in the browser. Now, what we're going to do, we're going to go ahead, we're going to change the parameters here. I'm going to go to the 6-month performance. And this is what we have. And what I personally look for, I look for stocks that have red. So for instance, we have GoDaddy here, and we have Fortinet under technology. Under restaurants, we have CMG, which is Chipotle, and under healthcare, we have UNH. So that's just the first step I take. Then I'll probably go even further. Now, the 6 months outlook, I do use that information. If I want to get very, very strong performance, I'm going to go to the 1 year outlook and see if any of the ones that I saw under the 6 months, if it still shows up under the 1 year performance. So as we can see here, this little red right here, that's going to be Akam. And right here, you're going to see Fiserv right here. It's currently down around 34% for the entire year. So, and that's what brought this to my watch list. And to the right here, you could see CMG is there again. So that's just basically a quick synopsis of how I find these undervalued stocks. This is a very good task to use. The reason for that is that all these stocks that are showcased right here are already in the S&P 500. So these good guys, these financial experts, have already done their own due diligence and decided that these stocks are worthy enough in order to enter the S&P 500. What I do, I just disseminate the information and use it in order for me to make consistent income. Now, for those who have made it to the end of the video, you guys are the real investors and future investors. If you guys are going to be investing or trading Fiserv, let me know in the comments below. Just type in FI, F-I. Now, thanks for watching. Make sure to like the video, subscribe to the channel. Most importantly, make sure to hit that notification bell to get an alert when I post a video. Now, I do produce all this content out there in order for me to help as many people as I possibly can to start generating income from options trading. So if you do know of anyone that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people start generating income from options. Lastly, if you guys need any additional coaching or one-on-one consulting with options, I will leave a link in the description below. Now, until the next video, keep pushing your investments.